Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my good friend Gary Wagner, the editor of goldforecast.com. Welcome back, sir.
Thank you so much. Great to be here.
Yeah, it's always a pleasure having you on, Gary. So, the big news, Gary, and the big debate actually lately is can the Fed keep raising rates with all of this debt that's piled up into the system? And basically, how can Powell continue to raise rates without breaking something? And how will this affect gold and silver? What do you think?
There's been a push-pull effect. Higher interest rates is bearish sentiment for both gold and silver. Silver also has the extra edge of performance in US equities, how stocks are because of that component. But inflationary pressures drive both gold and silver prices higher. What we're finding out is inflation has gone down, unquestionably, but there are components of inflation that remain persistent and sticky. And we continue to raise rates. They started in March 2022. And at every FOMC meeting from that point forward, they've had some sort of a rate hike. They have slowed down to quarter point rate hikes, which is what is expected to occur in May. And the blackout period, in other words, the Fed has been real vocal this week because come Saturday, they have to keep their mouths shut. And for Federal Reserve officials, I believe that's kind of hard to do. They enjoy talking, but they'll have to go into a blackout period and not say a thing until the statement is released and Powell concludes his press conference. So they're getting in their last minute digs. So we've had three Fed officials all saying the same thing. We have to continue to raise rates. Recent movements to the upside in both gold and silver have been predicated on the belief by market participants that a pause was forthcoming.
Right.
Possibly May would be the last rate hike. The suggestion now is that's not the case, and they're already talking about a rate hike at the June meeting. So things are liquid, they are fluid, they're in motion, and no one really knows what the Fed will do except continue to raise rates.
But can they even continue to do this without tarnishing or even trashing the credibility of the dollar? Like, how can they keep raising rates, Gary, without breaking something? You've seen over the year, the bond market is already breaking. How can they continue to do this?
Well, the short answer is they can't.
Mm,
And things are getting broken. Look at the dollar index. It hit a high of about 114. It's now close to 100 on the dollar index. So you've seen a huge depreciation of the US dollar. That has gotten hammered. Credit is harder to get.
hmm
Mortgage rates have gone up. And every time they ratchet rates, we're not even at a point where the Fed goes, okay, let's wait and see what will happen to inflation over time. They're still actively raising rates, and then they're going to keep them elevated. There was a thought that they would maybe start rate cuts this year. Pretty much that idea has been put to rest by numerous Federal Reserve members, including the chairman, who've said we don't even have a rate cut this calendar year on the table. He put it, it's not in our vocabulary, so to speak.
hmm
So not only are we faced with rates continuing to move higher, but remaining elevated. And the true damage will not be told until the dust settles and they're still sweeping the floors. In other words, the dust is still spreading. We can't tell how much damage there will be until that dust settles.
Right.
And we will not have an idea of that until they stop raising rates. The question to me is, it's not if this will all lead to a recession, is whether or not that recession will be shallow or deep. Because you can't contract the economy by raising rates,
Right.
which is the only tool they have to combat high inflation, without that economic contraction leading to a recession, when by definition, a recession is 2 quarters in which you have an economic contraction. So you have to have some sort of a hard landing. And the question is, how hard or soft will it be?
Absolutely. And do you how does this connect with gold and silver? Do you have a price target for the end of 2023? And yeah, how do you see us getting there, Gary?
Well, I'm really impressed with what we've seen with silver recently. easily go back to the 30s, which is not the all-time record high, but the recent highs when gold hit new price highs. I'm looking at about 2,200 by the end of the year to maybe even 2,300
Wow.
in gold. But the question is, first it has to reach 2,088, the current target or record high. It then has to break 2,100. So we've got a lot of levels to take out before we challenge 2,200, which is what I believe we could see, whether it's the end of 2023 or first or second quarter of the following year.
And how does that but what, let's say if the Fed keeps raising rates till the end of 2023, do you think gold will get there or no?
Well, the actual cause, the causality of gold moving up is not rates going up, because that's a bearish influence, because gold and silver don't yield anything. They're not stocks. They don't produce a product. They don't yield anything. And so as long as they continue to raise rates and keep them elevated, that's applying bearish pressure on both gold and silver pricing. However, both are highly susceptible to levels of inflation that are persistent and sticky and elevated. And the fact of the matter is, no matter what the Federal Reserve has done, I don't know about you, but when I go to Costco or when I go to shop, prices are extremely high.
Yeah.
It seems like not only are they not going down, but they're hiding them eloquently. The packaging seems to shrink, the quantity in that seems to shrink, and the price goes up.
Absolutely.
So, the marketeers for those selling us products are pretty snug in what they do by shrinking the package size, reducing the amount, and then still raising prices and going, we're going to keep it the same so that our consumers don't get hurt.
Yeah, no,
Hogwash.
I've seen a lot of that on the internet. You see it shrinkflation all the time. They'll put a product, same exact packaging, everything, just a little bit small. It's just crazy what they're doing. It's almost like robbery at the same time, and you have inflation. But just connecting to the same thing, I was staying on the topic of gold and possibly the debasement of the currency. There's been a lot of data that came out in the past week or two about how banks they've been buying more gold, Gary, now than they have in the past 55 years, going all the way back since 1967. Are they preparing for something big? And like, is it possibly full on de-dollarization? What do you think?
Excellent question. I mean, the central banks worldwide
Mhm.
have been quietly scooping up gold for about a year and a half. They've hit a record pace over the last 6 months. We always hear about it retroactive. In other words, what they're buying, we won't know about this month for a couple of months when it's actually reported. But on the surface, when asked, the response has been, we're diversifying our balance sheet. Again, hogwash. What they realize is that the only true currency of intrinsic value is precious metals. It has been for thousands of years, and I believe will continue to be. And so the whole idea, the experiment, I should say, of fiat currency, currencies that are backed by the faith of the government, are wearing thin on the minds of citizens worldwide. More than that, we went through a period of just a terrible time, the pandemic that led to a recession. And the answer to that was worldwide administrations flooding their countries with aid,
Mhm.
money. And the way they obtained that money or aid was what? They printed it. And every time they print more money, what happens? It devalues the currency itself. And so what we've seen that's unique in the world is a race with countries to take the value of their currency to zero.
Mhm.
Never
You
before in history has it been such a worldwide project to flood so much currency to prop up the economies of countries globally and all of the currencies. Because when the dollar was strong, it was strong against a basket of currencies.
right.
It still had less buying power than the year before, the year before that, and the year before that. If we look at buying power, purchasing power of the dollar, it's consistently gone down for, well, ever since they went off the gold standard in the 70s. But when we look at dollar strength, we're not talking about dollar strength. We're talking about dollar in comparison to the euro and the yen and the Swissy and other currencies. And when all of the countries are effectively just blasting their economies with printed money, it devalues everything across the board. And that's why you have seen investors, fund managers, money managers, hedge funds move back into gold, including central banks. So you've got the average investor to the central banks and everything in between recognizing the value of precious metals, of gold and silver, platinum and palladium to a different degree, but those are odd ones because they're only sourced from two countries, the majority, South Africa, and of course, Russia. So gold and silver is what we stick with, but it has been a overall move by citizens, banks, money market, hedge fund managers, and central banks to accumulate more gold and more silver than ever before in history.
Yeah, absolutely. I just seen an article too, Gary, a few days ago. They were saying the dollar's dominance as a reserve currency eroded just last year at 10 times the pace seen in the past 2 decades. In your opinion, are exit strategies being made? Like, will it be all at once from the US dollar or slowly over time?
Well, it's an excellent question that I can't give a concrete answer to.
Right.
My genuine answer is I don't know. The dollar has been the global go-to currency since the end of World War II.
Yeah.
Recently, both China and Russia have been kind of making a play to either goldify their currency, back it with something. Other countries have talked about moving back on some sort of modified gold standard. Some cryptocurrencies have tied themselves to gold. In other words, when everything fails and the currencies across the board become less valuable, they turn to the precious metals. Now, to answer your question about world dominance of the dollar, I don't believe that's going to wane as quickly as others might think. I continue to see Russia and China strategizing to make it not the dominant currency because it doesn't benefit them.
Right.
And so they have made some headway. But I think in terms of international business, the currency of choice is and will continue to be the US dollar, because what else are you going to trust with as much certainty as the dollar, even though that certainty is waning?
What about Brazil and Russia and China, the actual BRICS nation? Do you think they can go off and create an alternative to the US dollar backed by commodities or gold? Do you think that like Russia and China can pull that off?
Personally, I don't see that happening easily. I don't have an answer for that, obviously. But, you mentioned Brazil and Argentina, great producers of agricultural products, corn. They
Right.
do produce oil to a degree, but they've had runaway inflation, especially Argentina, that's been in double digits for the last decade. They've got problems of their own. They're just trying to keep their citizens happy and dealing with 10% monthly increases on inflation, and they've just begun to get a handle on it. The countries to worry about is a collaboration of China and Russia, because they are superpowers, and collectively together they have an alliance, and that alliance can in many ways, both militarily as well as in terms of commerce, go toe to toe with the United States. But the Western economies, Europe, many parts of South America, are going to always look in terms of international business deals as
Right.
being done by the major banks, and wherever they're located, except the Swiss banks, the majority of them are here. If you look at the five major banks, the money is sitting here. The Federal Reserve is still as powerful of a central bank as any on earth. The only thing that comes to an equal in terms of democracy is the European Bank, the Eurozone. Collectively, they've got some strength, but they're in unison with us. Again, the death of the dollar, I think, is greatly exaggerated at this point. Only because there's very few choices to turn to,
Right.
not because it's the desired currency.
Right. Right.
It's established. It's gotten its toes deeply embedded into the sand of global economies,
Hmm.
and it's not going to diminish anytime soon. And the major corporations that are global corporations, whether Apple started in California, has nothing to do with the fact that they do business across the world and they take in a multitude of different currencies. These are still based in the United States, North America, Canada also, but that's not going to change, I believe, for a long time. China and Russia are trying to establish a foothold, but they're swimming against the current of dollar dominance, internationally speaking, in terms of global business going on and worldwide economies.
Absolutely. Now, with all the chaos in the market, Gary, where are you putting your money? Gold, silver? Where are you putting it?
I'm still I have been a physical purchaser of both gold and silver for
Nice.
years. I really stopped buying gold at around 14 or 1500. I started accumulating silver over the last couple of years. I'm a fan of buying a kilo of silver every couple of weeks or so
Nice.
whenever I can. I'm not like your guys where there's the silver stackers that show rooms, filled with silver as in a very small basis as an
Right.
investor. I believe that my money is most solvent in real estate and precious metals. I'm out mostly of US equities completely. I used to keep part of my 401k in there. I no longer do that. My 401k is in my commodity account where I actively trade gold and silver.
Smart, smart.
That's me. Everyone should have a diversified portfolio. Start with your own home and real estate. That's something that at least the United States has huge tax advantages, breaks to the middle class, those that aren't making millions or billions per year. And then hard assets are something that a percentage of your portfolio should always recognize
Agreed.
as an important component, and you shouldn't change that in terms of the mix itself. You're actually getting a decent yield. The ratcheting of interest rates by the Federal Reserve has hurt a lot of things, but it hasn't hurt fixed incomes. They're actually able to produce a reasonable return, 3, 4, 5%. And that's a far cry from the 0.25% you used to see at your bank for a CD or something. Put 10,000 in a CD. A year later, it was worth 0.5% more, 0.25% more. There was nothing because you lost a lot of money when you compared the devaluation of your
Right.
buying power in the dollar to the fact that your 10,000 is now worth 10,100.
Absolutely. Well, Gary, we want to thank you so much for coming down to Wall Street Silver. It's always a huge, huge pleasure when you come down and talk about gold, silver, and the market. So hopefully we can have you back on soon. Thank you so much, Gary.
You're very welcome. I always enjoy spending time with you and your audience. You're a great group and continue to flourish.
Thank you. Huge, huge pleasure. And we'll put your social media and everything in the section below us so everyone can reach you on the YouTube link. Thank you so much, Gary. Talk to you soon.
Mahalo and aloha.
Take care.